Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial mumbo jumbo so you don't have to. Today we're diving into a filing that might seem a little dry at first, but holds a pretty neat little corporate maneuver. So buckle up because things are about to get a bit fractional. Before we start, if you appreciate getting straight insights from corporate documents without the fluff, make sure you're subscribed. We also have a Discord community linked in the description below, where we break down more filings and discuss market movers. It is a great place to learn and connect with fellow investors. Alright, let's get straight into it. We're relooking at a filing from BioScience Health Innovations Incorporated. The big news here revolves around an event that happened on the 10th of September of 2025. It's a pretty common move, but it can definitely impact how a company's stock looks and trades. So, what exactly did BioScience Health Innovations Incorporated do? They officially amended their foundational corporate document, officially called their Restated Certificate of Incorporation. Think of this as the company's rulebook. And the amendment. It was to do what is called a reverse stock split. Basically, for every 4 shares of common stock that shareholders owned, they would now only have 1 share. This is like a company consolidating its shares. This wasn't a surprise move out of nowhere. The company's board of directors gave it the thumbs up, and it was all done according to the laws in Nevada, where the company is incorporated. The good news they're sharing is that this move doesn't actually change the rights of the shareholders. So, if you own stock, your underlying ownership stake technically remains the same. It is just represented by fewer shares. And how was this approved by the actual owners of the company, the shareholders? It was done through what is called a written consent. This means a majority of the shareholders who were eligible to vote on this decision agreed to it in writing, making it official. Now, the company has filed the official paperwork for this change. It is listed as Exhibit 3.1, the Certificate of Amendment. This is the legal document that makes the reverse split official in the eyes of the state. It's also worth noting that BioScience Health Innovations Incorporated is identifying itself as an emerging growth company. This means it's a relatively newer company and has some flexibility in reporting requirements. And among the choices for emerging growth companies, they've checked the box to say they are not using the extended period to adopt new accounting standards. This suggests they're keeping up with the latest financial reporting rules. The filing also includes Exhibit 104, which is the cover page interactive data file. This basically means the document itself is designed to be read by computers, which is common for SEC filings these days, aiding in automated analysis. Now, looking at this report, there aren't any detailed financial tables with numbers showing revenue, profit, or loss directly within the body of this specific filing. This particular Form 8K is focused on a specific corporate action, which was the reverse stock split. Usually, you find core financial statement data in a 10Q, which is a quarterly report, or a 10K, which is an annual report. However, the act of a reverse stock split itself tells us something. Companies often do this for a few reasons. One is to boost their stock price. If a stock price is very low, it might be delisted from major stock exchanges. A reverse split artificially increases the share price by reducing the number of outstanding shares. Another reason can be to make the stock appear more attractive to institutional investors, who may have policies against investing in very low-priced stocks, often called penny stocks. In this case, BioScience Health Innovations Incorporated is consolidating its shares by a 4 to -1 ratio. This means that if a stock was trading at, say, 50 cents per S-hair after the reverse split, it would theoretically trade at $2 per S-hair, while the total market value of the company remains the same immediately after the split. The perception can change. From a shareholder's perspective, it's crucial to understand that a reverse split by itself doesn't magically make a company more valuable or profitable. It's more of a cosmetic change to the stock's appearance or a way to meet exchange listing requirements. The real value of the company comes from its business operations, its products or services, and its ability to generate profits. So, what's the story here? BioScience Health Innovations Incorporated is taking a step that suggests they might have been facing challenges that led to a low stock price, or they re-preparing for future growth and want their stock to reflect that ambition more effectively. It is a strategic move, and investors should always look beyond the share price and focus on the underlying business fundamentals. If this company has great products and a clear path to profitability, the reverse split might just be a necessary step. But if the business itself is struggling, a reverse split is unlikely to solve those deeper issues. Looking at the other details, the company is an emerging growth company and is not opting for extended transition periods for accounting standards, which is a sign of them staying current with regulatory expectations. They've also made sure all the legal ducks are in a row to implement this reverse split. In conclusion, BioScience Health Innovations Incorporated has executed a 4 for -1 reverse stock split. This is a common corporate action aimed at improving stock price perception and potentially meeting exchange listing requirements. While it doesn't change the fundamental value of the company overnight, it can signal underlying reasons for the split, such as a low stock price or a strategy to attract certain investors. The company's future success will depend on its actual business performance, not just the mechanics of its stock. From our perspective, it is a watch, and see situation to see how this move plays out for the company and its shareholders, and whether the underlying business can deliver on the promise that a higher stock price might imply. Alright, that is our quick decode of BioScience Health Innovations Incorporated's latest filing. What is your take on the reverse stock split? Do you think it is a positive sign or a red flag? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives into corporate filings done. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.